Did you know that Canadian commercial property investors have been increasingly looking south of the border despite ongoing trade tensions? Welcome to the Multifamily Real Estate Insights Podcast. I'm your host, Sandy MacKay. Let's get right to it. In recent news from CoStar, Canadian commercial property investors are showing a strong preference for United States real estate, even as trade disputes linger between the two countries. Canadian investors have continued to pour capital into the United States, making it the largest destination for their outbound investments. According to a report from MSCI, formerly known as Morgan Stanley Capital International, Canada ranked as the second largest source of cross-border capital for global property markets through September, with 30% of this investment flowing into the United States. The report highlights that Canadian investors acquired over $5.8 billion worth of assets in property deals priced at $10 million and higher. This investment trend is largely driven by the availability of assets in the U.S., particularly in the data center facilities market. Canadian investors often look outside their home country due to limited ownership turnover in domestic commercial properties. As Jim Costello, the author of the MSCI report, stated, "The U.S. is a natural first destination for much of this capital given its proximity and the size of its property market." Despite the ongoing trade dispute that began when U.S. President Donald Trump announced 25% tariffs on Canadian goods, Canadian investors have not shied away from U.S. opportunities. While some analysts had predicted that these trade tensions might redirect Canadian investment to other global markets, the data suggests otherwise. The industrial, logistics, and specialty sectors, such as data storage facilities, have become increasingly attractive to Canadian investors, reflecting a shift towards more resilient income streams and digital infrastructure. Interestingly, the focus has shifted away from U.S. office properties, which previously accounted for a significant portion of Canadian outbound investment. Now, industrial assets are capturing over 20% of capital flows, with mission-critical facilities like data centers accounting for nearly 8% of Canadian outbound investment in 2025, up from less than 2% 5 years ago. This shift is exemplified by the joint venture between Ontario Teachers' Pension Plan and Sagard Real Estate, which recently acquired a large industrial facility in Houston. The ongoing commitment of Canadian investors to the U.S. market, despite political uncertainties, underscores the strong fundamentals and opportunities within the U.S. industrial real estate sector. As we navigate these complex times, it's crucial to keep an eye on these trends and understand how they might impact our investment strategies here in Canada. The ongoing situation at 55 Triller Avenue in Parkdale, Toronto, has garnered significant attention as tenants rally against what they call a ridiculous above-guideline rent increase. This protest is in response to the property owner, Starlight Investments, and the property management company, MacKay Living, applying for an increase that exceeds the provincial rent cap of 2.5% for 2025. According to Catherine Manny's report, Starlight Investments justifies the increase by citing significant capital investments into the building, including the installation of new windows in 2022 at a cost of nearly 1.5 million Canadian dollars. The tenants argue that such improvements should not translate into increased rent, especially considering many of them, including seniors and low-income residents, cannot afford such hikes. They believe the move is a strategy to push out long-term tenants to increase rents without limits on vacant units. The Toronto Today article highlights that tenants have organized and presented a letter demanding the withdrawal of the AGI application, emphasizing the need for direct negotiation with the property management rather than going through the landlord and tenant board, where tenants often find little success in opposing AGIs. It's important to note that Ontario's Residential Tenancies Act does permit landlords to apply for such increases to recover costs from capital expenditures. However, this has been criticized as a loophole that allows landlords to impose significant rent hikes, contributing to the broader affordability and housing crisis in the province. Legal experts and community workers emphasize tenant organization as the most effective strategy against such increases, given the limited legal defenses available. Despite the challenges, there is a silver lining in tenant solidarity and the pressure they can exert through collective action. Past cases have shown that organized tenants can successfully negotiate concessions outside the formal legal process, making it a viable path forward. This ongoing situation in Parkdale is a critical reminder of the importance of tenant advocacy and community support in navigating the complex landscape of rental agreements and housing rights. In the latest development in the Canadian commercial real estate sector, Max Canada has hired a seasoned professional to strengthen its commercial business. Damon Conrad, a real estate veteran with over 20 years of experience, has been appointed as the Vice President of Commercial at Max Canada. This move comes as part of Max's strategy to bolster its commercial operations across the country. Conrad joins Max from Royal LePage Commercial, where he served as Vice President and General Manager. His extensive background includes roles at Cushman and Wakefield, SNC Lavalin, and Second Cup Canada. With this wealth of experience, Conrad is expected to guide Max Canada's commercial growth and help the company embrace new technologies. Max Canada President Don Kotick expressed confidence in Conrad's ability to elevate the firm's commercial offerings. According to Kotick, Conrad's track record in building national platforms and expanding agent networks will be instrumental in navigating the current market landscape, which is shifting towards fundamentals like steady rental income and creditworthy tenants. Conrad himself noted the momentum and vision driving Max forward as key factors that attracted him to the role. His achievements, including winning the NAOP Real Estate Excellence Award for Office Lease of the Year in the Greater Toronto Area, underscore his influence in the industry. This appointment comes at a time when the Canadian real estate market is adjusting to higher borrowing costs and economic uncertainties. As the market shifts focus to fundamentals, having experienced leadership like Conrad's is crucial for navigating these challenges and capitalizing on opportunities. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.